Hi, good morning, everyone. Welcome to another edition of the FundQuest webinar, Series 4. Today, we will be discussing investment opportunities for emerging millionaires. Basically, when it comes to investment, the trick is balancing risks versus rewards in your favor. And you can only achieve this by ensuring that you understand an investment, either by carrying out extensive research on recent trends or seeking the opinion of experts. Doing this will allow you to consider the downside of certain opportunities while considering the upside of others. Because in the event that you do not understand an investment or the risks associated, you would not be able to avoid the consequences when the market and all your investments plummet. Not to worry, at FundQuest Financial Services Limited, we understand the significance of education before investment decisions. Hence, this webinar presents you the opportunity to learn directly from seasoned investment experts. To kick off the session this morning, I'll be introducing our speakers and chief host for today. Our first speaker is a consummate investment and economic analyst, Mr. Bisi Oni. Mr. Bisi Oni is an experienced corporate strategist with years of experience in asset management and research basically. He was at various times the head, economic research and financial advisory for Financial Derivatives Limited. He was also at various times head, funds and asset management, FVN Capital, a subsidiary of First Bank. Currently, Mr. Oni is Executive Director, Chief Operating Officer of FundQuest Financial Services Limited. Thank you, Mr. Bisi Oni. It's a pleasure to have you on the session this morning.
Thank you very much, Awa. It's my pleasure. Thank you so very much.
You're welcome, sir. And our co-speaker for today is a renowned financial literacy expert, Tosin Olaseinde. Tosin is the founder, CEO, Money Africa, an edtech platform that enhances financial literacy. Proud to owning Money Africa, Tosin has worked in several multi-organizations as an auditor and financial analyst. Tosin is a member of the Golden Key International Honor Society and also LinkedIn Top Voice for Finance and Economy. While we are with Tosin to come, I'll quickly introduce our chief host for today. Our chief host for today is the Managing Director, Chief Executive Officer of FundQuest Financial Services Limited, Mr. Abiodun Akinjayeju. Mr. Akinjayeju is a chartered accountant with significant years of experience in project financing, securities trading, and investment management. He was once the special advisor to the Honorable Commissioner for Finance, Lagos State on technical matters. He was at various times the head of capital markets at FBN Capital. Thank you, Mr. Abiodun Akinjayeju. It's a pleasure to have you on the session this morning.
Thanks, Howard, and I welcome all our guests. Please feel welcome. Thank you.
Thank you, sir. My name is Awal Sulaiman, and I'll be your anchor for today's session. In the event that you have questions, please make use of the Q&A button. Or you want to contribute or drop your comments, you can make use of the chat box right in front of your screen. It promises to be an insightful session, so please stay tuned. Without wasting much of our time, I'll be taking our first presentation from Mr. Bisi Oni. Sir, you may please have the floor.
Thank you very much, Awa. A great pleasure to be here, and a warm welcome to all our guests and participants. I also want to especially welcome Tosin, who is just joining in. And today we'll be speaking to various investment opportunities that we find in the marketplace and how you can take those opportunities very, very carefully. Like Awa said, there are various landmines in investment and investing decisions. So it's very necessary that you are guided, and that's why FundQuest has put this together. Before me today, I'll be speaking to this, and I'm to play the John Baptist for Tosin, who is also in now. I'll be speaking to this topic. But before we start, I want us to just do a quick check of our personality. I'm asking you if you are to choose between 100 million naira today and 1 naira, but that doubles every 30 days, what will you choose? I want the audience to just throw in their answers. Let's see that. If you are to take 100 million naira today, right away, and 1 naira, but that 1 naira that doubles every day for 30 days, what will you choose? Let's see the answers coming. Can you just throw in? Let's see thoughts. Okay. We are getting feedback already. What will you choose? Okay. 100 million naira, 100 million naira, 100 million naira, 100 million naira. Someone said 1 million, 100 million naira. Someone said number 2, which is 1 naira today. Someone said number 2. Okay, terrific. Number 1, number 2. Okay, wow, 100 million. Number 1 again. Number 2, 1 naira. 100 million naira. It appears the number 1 from this, I know voting is still on. 100 million naira ASAP. Someone said I would choose 100 million naira ASAP. Interesting. That's fantastic. So what will you choose? Now you want to do that quick poll. You can make that choice very quickly, and then we'll see the result. Maybe for about 20 seconds, can we just put that in there? The organizer has kindly put it in the form of a pool. So in about 30 seconds, let's just see that. Which will you choose, 100 million or 1 naira that doubles every 30 days, every day for 30 days? Okay. All right, while that is going on, it's very interesting to see a particular comment that says, I would choose 100 million naira ASAP. That's interesting. Is looking at, he has his reasons, and I'm sure if I bring you up, you have fantastic justifications for each of the selections. So I reckon the organizer will give us the result of the poll, but let's go ahead. Let's see the results for those who have voted. Let's see the results. And okay, 69% said they would choose 100 million naira. Fantastic. And 31 said, I would choose 1 naira. Excellent. So let's see the rationale. You are neither right nor wrong, but this is what your answer means. If you are choosing 1 naira that doubles every day, by day 28, you have 134 million. And by day 30, you'll be having 536. You are neither right nor wrong, especially those of you that chose 100 million. The only thing that speaks to is the mindset. The need to start small, the need to learn to delay gratification, the need to learn the art of patience in investing and investment decisions. So that is, like I said, it's not right nor wrong, but just to check your mindset. Now, this is what I'll be walking you through this morning, but there are a few things we needed to, some house clearing rules that we needed to talk about investment. I said that you have no excuse for not investing. I've heard quite a number of some of my students and some of my mentees say to me that, look, I don't have money, I don't have this, I don't have that. You've got a skill. Your seed capital, the most important seed capital for investment is with you, and that is your skill. And investing is a deliberate and intentional act. It's a deliberate act, it's an intentional process. It requires patience. Like we spoke to the other time in that choice, in that pool that we just conducted, it requires patience. It's not a press and play button. You will lose money. Just know that you will lose money in the course of investing. Every investor mastered the art of living with this reality. I need you to swallow that and then come to terms with the reality. And I need to beg of you that don't follow the crowd in taking investment decisions. You are different. And the result that you saw in the pool we conducted meant that you are different. Your mindset is different. Your personality is different. Your background is different. Your expectations is different. So herd mentality is very costly, and it could cost you your capital. Know thyself. Investment, from what I've seen in past years, as I've learned few things. It reveals who you are. Investment tells you whether you're a speculator, you're a gambler, or you're an investor. So, by the fact that you're putting money aside does not make you an investor. You could as well just be a gambler. You could as well be a speculator. The concept of an investor has certain attributes. And if we are talking about emerging millionaires and saving for today, saving for tomorrow, today meant that you need to dimension your personality. And it requires you to learn, to unlearn, to relearn, and to repeat the process all over again. Because investing reveals who you are, whether you're a fearful person or you're a greedy person. And that's why I so much love this, because I mean, there is no other act that tells you this. It's when you begin to see in investment world, you'll be punished for not learning what is there to be learned. So until you learn the act of investing, there is no going. Remember this, without a goal, investing is just a wish. A goal is what drives you. You are careful to take care of that 100 naira, that 500 naira, that 1,000 naira. And in the first picture that we talk about savings, is about setting something aside. Don't forget, your savings is what goes into investment. And in plain vanilla economics, when you see the Y is equal to C plus I, the Y is your income, the C is your consumption, and the I is the investment. But in Keynesian economics, you also have that high as C plus S. So you can differentiate your savings from your investment. It's part of what is saved that goes into investment. And not until you have certain components, something you can put aside, then you may not be talking about investing. Why should I invest? Perhaps that question may have agitated your mind. But I mean, one of the reasons you may want to invest is financial freedom. Because, I mean, Warren Buffett said never depend on a single income. He said find an investment and create a second source. It is very necessary. Why do you think people are keeping two jobs, especially in advanced economies? Why do you think people are doing multiple tasks, trying to balance the time they got? Your time, your skill are the most investment tools that you have. If you're only looking at money as an instrument of investing, then you are making a big mistake. And someone said, well, I have a job. So quite a number of the generations that have gone ahead of us made this mistake. I remember when Naira suddenly moved from 21 Naira to $1 and to 87 overnight, it was a disaster for the industry. Quite a number of people lost their job. Most of them never recover. You don't want to fall into, because history will still repeat itself. You don't want to fall into that trap again. It will still happen. And before you invest, if there are things you got to do is reading. Awa talked about education. We are big on ensuring that you have something upstairs there that drives your investment decisions. Don't follow the herd. Don't take decision because other people are taking that decision. If you read these two books, I mean, these are my own preliminary recommendations. You need to study, ask, seek, engage, learn. You need to read and learn the art of investing. Like I said earlier, investing is a deliberate act. You just don't want to follow what is trending. What is trending may not be cut out for your time. It may not be cut out for your person. It may not be cut out for the skill set that you have. It may not be cut out for the type of investment volume or your savings that you have. So why follow the trend? Why trying to do what other people are doing? And guess what? When they lose money, they ain't going to come back to tell you. So in investing, even if you gain nothing, you learn. You are better off. Because the truth be told, I mean, our guest speaker today, Tosin, for instance, she's profiting from selling knowledge. The world has moved from brick and mortar to what you got upstairs here. And if you don't have anything upstairs and you stumble on money, it's a question of time. You're going to lose it. It's a proven fact in investment. If you don't know, you are not granted to learn the basics of investment disciplines. If you stumble on money, maybe from your employer, either bonus or something, or you got an inheritance, you're going to lose it at the end of the day because you have nothing to sustain it. Knowledge is what sustains whatever investment. Even after you have made money, you keep learning, you keep reading, you keep studying, you keep going for seminar, you keep educating yourself. Investment, first of all, happens here before it happens in your hands. If you cannot conceive it, if you cannot think it through, if you don't understand it, don't get into it. A great investor, Warren Buffett, said, he said, I won't touch any investment that I don't understand, no matter how seemingly profitable it looks. And that's why Warren Buffett is not in the crypto space currently. He may be wrong, it's not always right, but he has learned to keep himself within the space of his understanding. And with that, I mean, you can sleep well. So where should you invest? I haven't spoken to the fact that it's necessary for you to learn the art and discipline of investment. So where should you invest? Number one, I use this to paraphrase the profile of investments, trying to understand asset classes. Hear this. You don't have to be an economist or an investment analyst before why you should bring yourself to bear on certain investment opportunities or investment classes. You need to educate yourself to the extent that on top of your head, you should be able to categorize this investment is equity, and these are the downsides of equity. This investment is fixed income, and this is the upside of fixed income. This investment in real estate, both the real called brick and mortar real estate and the securities in real estate, like REIT, for instance, that you can trade on the Nigerian Stock Exchange. And alternative investment, you need to understand all this. Then others, we're talking about foreign exchange, talking about other securities, the metals and all that. Most of these assets are traded on exchanges these days. So not necessarily you need to hold them physically. And talking about digital assets, cryptocurrency space is the boss. You know, Nigerians, we love shiny things. There is hardly anything anywhere in the world once it's shining. Even if it's not shining anywhere in the world, once it comes to Nigeria, and you see people just gravitating towards that. That's why people have lost humongous sums of money. So it's hold to the fact that no one has sat down to understand, does this fit my investment profile? Does it fit the type of risk that I can take? Does it fit into the expectations of return? But guess what? Nigerians will love to just look at the returns. Oh, this return is 1,000% overnight. And then after that, I don't care what the risks are. Guess what? There is nothing like free lunch. You're going to pay whatever it is. So in making an investment choice, key variables you should consider are: one, liquidity. How quickly can I have a return, access to my money? Your liquidity is key. If your investment, especially if you are not the type, if your portfolio is concentrated, if you have a portfolio of assets, for instance, maybe you have portfolio in equity, you have portfolio in real estate, you have portfolio, say, in fixed income, maybe that's fixed deposit and all of that, or treasury bill, you must always keep something near in cash or near cash. Why is that necessary? That is necessary to the extent that you could see an investment opportunity at the very short notice that you want to take advantage of. If you don't have cash, then you're not going to take such an investment opportunity. You're not going to take advantage of that. Then risk appetite. Investment is a garment. Wear the one that fits you. Risk appetite, you should know yourself now. That's what I talked about earlier in working the obvious truths in investment. You must be able to dimension, what can I live with? If I lose these 2 million naira, will it be the end of the world for me? If the answer is no, then you can go ahead. But in structuring your portfolio, never forget this. Diversification is a major tool. You should never forget, no matter how profitable an investment is, never concentrate all your investment cash into one portfolio. Diversify. Then expected return. You have an expectation in your mind. You know, earlier I talked about greed. That investment will let you see how greedy you are. When you are investing, it will also let you see how fearful you are. If you're playing on Nigerian Stock Exchange, for instance, and maybe you've done over a 5-year period, you've done a 2x on a particular investment, and you feel that well, this is going to go up, especially when in the market madness days in 2007, 2008. I mean, those days, even taxi driver was saying, look, this is going to go to 5 naira. This, and a security maybe that listed for 50 kobo, in no time you see it at doing 5 naira, 10 naira, and you see people making projections that are going to go to 20 naira. Take your profit and we'll take a work. Decide your return on investment ahead of the decision of investing. Then you can take and decide to come back again at a lower level. So these are the summary of what I've been talking about. Money market presents itself with high liquidity. Is something you may want to consider. FundQuest will be too happy to help you, guide you. There are analysts that will be waiting, that will be too happy to help you structure something within this space. Then you can also talk about the capital market. Don't forget in the capital market, I don't want to go into that details. We have the primary sector, we have the secondary segment of that market. And in the primary sector of the capital market, that's where company issue shares, and most often than not, the proceeds, depending on whether it's the offer for sale, which goes to the investor that is divesting, or offer for subscription, which goes to the company directly. You want to take a position in a company with its sound fundamentals. And when you are looking at company with sound fundamentals, you are looking at the management. There are certain equities in Nigeria capital market now that the investors have priced the stability of management into the share price. And there are some of them that it has a very big question mark. So you want to put your money where you know the track record of this company, you trust the management, you trust the earning, and you trust the corporate governance. This is big beyond the figure that have been churned out. The corporate governance quotient of that company, you want to also take a look. And most of these things are published, and there you can read quite a number of publications. Our research team also put quite a number of information out there for guidance. In other AIs, alternative investment space, real estate, in real estate, some years back, I think about 6 or 7 years ago, a friend told me about when Lagos State, I think during Fashola or so, was doing a lot of traction of construction along Badagry Expressway. And he said, look, that is the new Lagos, and you need to go there. Less than a week ago, I was with someone in Alausa and was telling me, look, I bought some property along that axis, and he wants to offload. He's done about 270x of the property he bought. And this guy works in Alausa, and he was showing me some documents that in that axis that I want to just sell one day that he's selling is going to take out all his total investment within that space. That's real estate for you. But again, if you don't have appetite for really holding a specific real estate asset, you can also buy REIT, real estate investment trust. You want to profit from a bucket of real estate assets. There, I mean, we have a couple listed on Nigerian Stock Exchange. You can check it out. Then cryptocurrency, I mean, there are quite a number of them within that space, but do your research. Do your own research, DYOR, do your own research within that space. Agree, you are not unaware of fintechs within this space. Either you are doing a primary agriculture, or you don't have the time, or you have such a small amount, you want to play in the secondary market of agriculture, you want to play within that value chain, and you can play after doing your research. Forex, trading, all those other things. All this I've talked about, we have been emphasizing skills. Once you develop here, you develop your mindset and your skill set, then you will be able to hone your tool set such that you can cherry pick any of these investments that fit to your personality and return expectation. Alternative investment comes with slightly higher returns, but definitely, like I said, it comes with higher risk as well. So if it's not something you are going to, you don't have the appetite to play in, you better just stay. If you don't want to get wet, don't near the river. Where and what not to invest. when someone promises you that, look, last year, for instance, a particular bank wrote us in FundQuest and said, look, for your investment, no matter what it is, we are paying you 0.00% per annum. 0.00% per annum. And when I was discussing with a friend, I said, they should have just written that, look, we are not paying you anything. I said, but they are paying us 0.00% per annum. That is still return. It is just zero. But guess what? Within the same space, when market was down, there were a cocktail of the fly-by-night investment. Well, I won't call them investment. I will call them gambling machines that are out there. You know the names. I mean, this is not a platform for me to mention the names. You just click a Google, and then it will tell you quite a number. The unbelievable ROI that you yourself, you sure that is this possible? Then at other ones, bring two and then you win 10 million. Bring two people and you win this. If it's too good to be true, probably, maybe it's not true. FundQuest, we understand investing. At FundQuest, we understand investments and we know how to walk you through it. You can take investment opportunity with our superior in our treasury business space. We have a cocktail of products that can help you meet that return expectations and dimension the risk. We help you, first of all, to, if part of our advisory mandate is to help you create a portfolio, first of all, to see your risk tolerance limit, to help you see what are the other, where you have some ethical consideration for your investment, the volume of investment you have, and the return that is possible. You can also consider us for some of those flexible loans you want to grow your business or wealth. Maybe you see an opportunity in the market space, you want to take advantage of that opportunity, we're happy to discuss with you. Or you want to lease an asset, maybe a laptop or something, you can also consider our lease business. I guess our lease analyst is currently on this call, and he'll be too happy to speak with you. Then financial advisor. Here, what we do basically here, you see, we don't just take your money and say, oh, thank you so much, we love your face, and thank you, we'll see you in 90 days. We don't work like that. We don't work like that. Our strategy is to help you structure those things. We ask you questions as regards your funding need, your liquidity, and whether you have investment elsewhere. We look at your age, because if you are, say, 60-year-old and you are taking equity decisions, you are just getting into equity, there are certain things we tell you, the percentage of what we'll be recommending to you will be related to your age and part of what you currently have in your portfolio. So our financial advisor and partners are waiting to look at what you have and also help you dimension the risk within the business enterprise that you are considering. And of course, also payment, you can do that. We're developing a competence in payment, FundQuest mobile and online. You can see that on our website. You can read more and interact with us more. So these are the cocktail of information or products you can see on our treasury bucket. These are the bouquet we have, platinum investment notes. Those are for the high-end investor with minimum of 100 million and above. Instant value notes, target investment plan, Quest Vault. That's where you can lock up your funds for a specified period. And each of these 6 products, they come at different investment returns and tenure. The structuring is different, tailored to meet that particular objective that you set for yourself. I said earlier, investment is a decision. And I said, so is also consumption. Investment is like a garment. I'm sure in dressing for this occasion, you wear the one that you are comfortable with. And more importantly, you wear the one that fits. You want to take investment decision that you can sleep, that you will not be having nightmares. Will this company go down? Will my return come? Will my principal come back? Is this company registered by CBN? All those information, the due diligence is your call. After you've done all that and you take a step, a decision, even if you want to take a decision with a competitor, we help you do due diligence. We've done it for some of our clients. They want to put part of their investment with a competitor. We give you information, validatable information that is available in the market space and some of the intelligent information that we have of that competitor. And we tell you, do it like this. So we have mastered the art of creating that garment for you and will help you to taking that investment decisions. So in becoming an emerging millionaire, One of the key things that I've learned that is very important that you must know is to be mindful or be full of mind. How do I mean? Is your mindset that must be the first thing you put out there. Investing is a strategic process. It's not a knee-jerk reaction. It's not an head mentality decision. It's a process. You don't have 100 million that some of you have chosen today and you say, oh, let me just hit the road. FundQuest, I want to just come and give you this investment that is doubling. Let me give you this. No. You want to, first of all, ask yourself, what do you want to experience? In terms of your relationship manager, in terms of the security of mind, in terms of the peace of mind, in terms of return, in terms of the risks, who will be that trustworthy to tell you the way things are, dimension the economy, dimension the market, give you probable market direction based on sound research. So in you, it means in answering the question of who, that is you. You must study, you must learn, you must determine what am I investing in. The next question is, what am I investing in? And the next is why. What's my objective? What's my objective? How do I want to go about that? Do I want to invest, just take a decision once and then I fold my hands? Or I want to do an instrumental or a gradual process? Or when, and you have next question, when do I want to do that? And where? Which firm? Which company? Who is my investment partner? Who do I want to go with? What type of solutions are they providing? This is what we've done very creatively in about 9 years of FundQuest. Then I round up with this. According to General Rumsfeld, a one-time war general of the USA, he said, there are in life, there are certain uncertainties. Indeed, in explaining this matrix, he said, he used this matrix in dimensioning the Iraqi war. He said, there are known knowns, there are known unknowns, there are unknown knowns, and there are unknown unknown. In pitching your investment, you must choose within the known things you are aware of and understand. And even if you don't, you can move to the next quadrant, the known unknown. The most important thing for you is, first of all, to be sure that things you understand, but you are not aware of. You have a clarity of a bit of understanding, but you are not aware of that investment opportunity exists, will help you navigate that. The area you should never go to is the unknown unknown. You will burn your fingers, you will lose your money, and you will lose your shirt. So all we are saying to you this morning is that choose your investment partner very carefully. FundQuest is available. Thank you.
Thank you very much, Mr. Oni. That was an insightful session. We learned a whole lot of things, and some things we need to note this morning, dear participants, more on the mindset. When it comes to investment, it has to do with your mindset. And you should also note that investment requires patience. Aside from that, you need to read, learn all you can about investment before investing. And lastly, in structuring your portfolio, diversification is key. Thank you very much, Mr. Oni, once again. I'll quickly take a question from one of our participants, and it says, Mr. Oni, you talked about learning while investing. Does that mean I should not invest till I have known all I need to know about a particular investment before investing?
Learning is a journey, so is investing. So it's a form of lifestyle. You wear your garment to suit the type of lifestyle you want to portray outside there. Learning is continuous. Investing is also a continuous process. So you learn, you make your mistake, you go ahead and learn again. You continue to make mistakes until you master it. But that's when you also need to work with trusted advisors. People will tell you, beware of this. The benefit of what we have is that we work with quite a number of investors, both the good, the bad, and the ugly. In terms of people saying, look, don't mind, I will take my money there. They'll come back to tell you the story. So let me just answer it that way. You keep learning as you continue with investing.
All right, so one more question. In carrying out our investment, what are the things we should look out for in order to be well informed about investments we are venturing into?
that question appear omnibus in carrying out investment. If let's just use an example of, say, equity. You want to invest in equity. It's something you've been reading about, something you love, you want to know more about it, and then you can decide to get a few things. But in understanding equity or any form of investment at all, take time to ask yourself, do I understand this at all? If I don't understand it, can I get someone to explain it to me? Or is there any way I can read about it? I always love to know something, no matter how little, anywhere I put money, no matter how little. Because if you don't know anything, it's like just giving your money to Money Doubler. And they say, look, this thing, give me 1 naira tomorrow, I'll give you 10 naira tomorrow. Today, I'll give you 10 naira tomorrow. So in taking investment decision, it depends on that investment you're talking about. For instance, if I want to invest in Tosin's company, for instance, if I want to take investment decision in investing in Tosin's company, I need to have a conversation with her. Try to dimension what she does, her type of revenue, the type of cash flow she's generating. I'll be too happy to take such investment because I know Tosin will be generating humongous cash. So I'm happy to have a conversation with her on that score. I love projects when they are just coming up, because once they grow, definitely they are out of your hands. So Tosin, maybe we are going to have a conversation after this call, so.
Thank you so much, Mr. Bisi. I'm laughing at you. You had a fantastic presentation. I was even writing down notes. Well done. It was an excellent one.
I'm here to learn from you, Tosin. So that's why I'm waiting.
All right, so let me go. Okay. Let me go ahead. All right.
All right. Thank you, sir. For our participants just joining us, don't be afraid. We will send a recording of this webinar to your mails. And for the questions I can't take now, please be informed that we'll send the answers via mails, just in case you're not able to attend to them before the end of the webinar. So thank you, Mr. Oni. At this point, please join me as I welcome Tosin Olaseinde to educate us on the investment opportunities for emerging millionaires. Thank you, Tosin. You may please have the floor.
Fantastic. Thank you so much for having me. And once again, Mr. Bisi's presentation was so stellar. I enjoyed it so much. Right? So let me just share my screen so that we can jump right into it. Please, can you give me permission to share my screen?
Okay.
Fantastic. Thank you. Okay, great. So good morning, everyone. My name is Tosin Olaseinde, and I'll be speaking to us today about investment opportunities for emerging millions. It's so interesting how prior to me starting, I did not see Mr. Bisi's slides, and it was quite interesting the line his lecture went on, and I'll be speaking about this as well and just speaking to you. So why did I start Money Africa? I remember I got my first job at the age of 20, and I was earning reasonable good money. I was living in Johannesburg, earning good money. I lived there. I worked there for about 4 years before I relocated back home. And guess what? I came back to Nigeria with nothing. It was so bad. I was in church. My mom squeezed 500 naira into my hands as offering. And that day I cried because I had seen good money, right? So now, whenever we're talking about personal finance, it's not just about the money. It's primarily the habits. And the nature of my class today will speak a lot about the habits, about the mindset, and also about different, ways to actually manage that money. When I came back to Nigeria and I saw I had to start from scratch without any money, I started calling my friends, asking them, hello, how do you manage your funds? And, do you have savings? Do you have investment? And it was like a similar kind of story. So I knew that there is a market for this. It is something we need to keep talking to people about. That way we can get it right. Great. Let me go to my slides. The very first question I want to ask you is, what is your financial goal? How many of us have financial goals? Now, many people are thinking about, how can I get Mr. Bisi on his job? The people working under him are thinking about how to get his job. You're thinking about how to get your boss's job. You're thinking about how to get to the next level. You want to become a chartered accountant. You want to be a chartered engineer and all these other things. People have goals for their career, but many people do not clearly articulate their financial goal. Have you asked yourself, when will I, in my personal capacity, have about $1 million? How many people have done that? Many people have not. Or let's say it is $500,000 you want, or let's say it is 10 million naira you want. Do you have a financial goal? Now, financial goal, we have three different categories. We have the short term, we have the medium term, we have the long term. The short term is anything that is less than a year. Medium term is between 2 to 5 years, and long term is from 5 years and above. So please, after our session today, I'm indulging you to please get a pen and paper and write down a goal. Now, the powerful thing about writing down a goal, work towards it, because you know that this is what you want to do. The picture is there, so you are motivated to put in the work in order for you to achieve it. Now, the next thing we're going to talk about is content. So we're talking about, is wealth a mindset as a result of choices? Do I need a budget, risk and return, asset classes, amongst others? Now, I'm going to ask us a question. What do you think is wealth? Is wealth as a result of mindset, as a result of knowledge? What do you think? Come into the comment section. I want to get your answer. Is wealth mindset or choices? Guys, please indulge me. I want to see your answer. Who else? Umwa is saying mindset. Someone is saying, in fact, 80% of wealth is actually mindset. You have to have the right mindset about money. Wealthy people spend much more time thinking about their money than people that stay average or remain poor. The average adult spends 2 to 3 hours each month on their money. So they are paying bills, they're doing POS, they're doing all these normal, regular things. But there's not a lot of structure and strategy to that thinking. But those that stay wealthy, they spend 20 to 30 hours per month. So at least 1 hour every day, they're very deliberate. What is the inflation number saying? What book am I reading on personal finance? What move am I making today that I'm securing my future? They're very deliberate, they're very strategic, they're very intentional. I love to use the scenario. Do you know that based on research, a lot of people that win the lottery, they go back into poverty? Yeah, they do. So now people are thinking to themselves, how can you win $1 million? How can you win 10 million pounds and go back into poverty? But it boils down to mindset. They don't have the right mindset and they're not willing to pay for the knowledge. They could have just gone to get a financial, maybe even get FundQuest to manage their funds for them, but they did not do that. And that is why we keep preaching this, because even if you think more money will solve your problems, when more money comes, if you don't know how to manage it, we'll be back to where we started from. So it is very, very important that we have the right mindset. And guess what? Every day is a continuous journey and learning. The investor I am today is better than the investor I was 5 years ago, and I keep getting better, and that's what it is. So my point is, keep getting firmer, you keep making better decisions, you keep learning more things, you change your association, you change the kind of information you get, you start rubbing minds with different people, and you start stretching your mind. And we have to be very deliberate about it. After this session, I indulge us to go and read a book. It's called The Psychology of Money by Morgan Housel. Why am I very aggressive about this topic? It's like, even if you get that money and you don't have the right mindset, it's going to be like a basket. It will pass through you, but you'll not be able to hold it. And we need to be able to hold it. Every time you lose money, you deny yourself an opportunity to compound. So it's like starting from scratch. And many of us struggle with it, right? So we keep looking at lots. You remember that we don't yet have enough research to see people passing money from one generation to the next. We're still all very young. Our children will be like maybe the third generation, and then the other will be like the fourth generation. Do you understand what I'm saying? So this is still all new for us. So we want a situation whereas we're creating a generation that Olaseinde is passing it to the next one, and then we're passing it to the next one. We want to keep sending it to the next generation. And if we don't have the right knowledge, we will not send it to them, and we want to send it to them. So every time I'm speaking with my friends, even with the quality of the conversation, they want their children to go to Ivy League. They're making the right decisions now, good education, you understand, giving them choices, giving them options. Why? We want to send that wealth to the next generation and we want to build it. So it's a journey and we're doing this together. So please indulge me. Read the book called The Psychology of Money by Morgan Housel. The next slide. The rule is this: we need to spend as much time investigating the investment as you spend earning the money that you are thinking of investing. Now, it gets interesting, right? In as much as I want us to investigate, I want us to do our research, I also don't want us to dilly-dally. And I'm going to confess, I told you that for the first 5 years of my career, I was eating from hand to mouth. I didn't know how to go about it. it boils down to procrastination. You're always telling yourself, I will do it, and then you never did it. Now, a lot of, I was studying in South Africa, so I had access to these things. I could have bought global shares and done all these things, because many people in Nigeria then did not have the access. So I can't lie and say I did not have the access. I had the access, but it was more like, you just never did it because you just dilly-dallied. So in as much as I want you to investigate, I don't want you to dilly-dally. I want you to be able to make a bold move. You've done your investigation, start small. It's like a muscle, and then you keep getting better. You keep changing your strategy. You keep learning. There are sometimes you will make some mistakes. The thing is that we want you to make more rights than you make wrongs. You will make mistakes. It's bound to happen. But we want to have more wins than we have losses. So you will never know until you get there, do the investigation, try, and then you keep getting better. Fantastic. Now, the next one is this. There is never a rush. I also sometimes hear people say, I have to do it now. Oh, the investment will go away. Oh, that is a lie. There'll be another one. Investments are like buses. There'll be another one coming. You know that revolving door. If you miss it, you have to wait. It's coming again. It's always going to come back. Sometimes people feel like, oh, I've missed an opportunity. And the truth is that it still boils down to mindset. Remember, our parents did not have Bitcoin to invest in. It was not there during their own time. Now we have all these digital assets and all these nice, cool things. Our children will have different instruments to invest in. Again, remember, I keep talking about how this thing is a journey. It's like a whole mindset change that we are being deliberate about, changing how we think about it. So don't feel like I've missed out. It's too late. I can't start now. No, the best time was 10 years ago. Or 20 years ago. The next best time is now. Your today is just fine for you to start that journey. Sometimes the best investments you make are the ones you never make at all. So if you're in doubt, or you've not done your research properly, you don't trust it, put it in low interest asset and just wait till you're able to do a proper research and able to make a good decision. Now, if there's anything that you do not understand or that seems too complicated for you, do not put your money there at all. Wait it out, right? You've worked too hard for this money. Some people even have to deal with horrible bosses. Some people have to sit in traffic for 3 hours. You see all the labor you put into making this money, right? So we are making sure that we don't just let it trickle away, that we have worked so hard for it. We want to ensure that we are putting it in the right soil so that it grows in the long run. Now, this is the part I love most. Wealthy people never leave things to luck. Wealthy people are very aggressive about protection. They protect their territory. I was having a chat with my friend last night, and we're just talking about how there's a cabal, or how people protect their turf, right? They don't want more people to get in because they want to be able to keep enjoying that profit. This is just one of the examples of protection. They know what they are doing. So even on the media, it look as if they're enemies or they're fighting. It's a lie. At the back, they're protecting their territory. They want to ensure that they protect that thing that they have. We need to start thinking like the wealthy people. How can we protect what we have? Now, what is within our power? Number one is your health. Your health is your biggest asset. If you don't have health, there's really nothing you can do. So do you have things like health insurance so that, God forbid, if you fall ill, you have to go to hospital, you're not paying out of pocket. Every time you pay out of pocket, you are cheating yourself of something you could have invested for that. So we are very aggressive on insurance, protecting what you have. Another thing is preventative strategy, things like exercising, drinking water. Look for what will motivate you. I know I've been speaking a lot now, but now, for instance, I know that I've seen a couple of my friends like they're going to gym, they're exercising. I'm feeling so gingered. Like I also want to do this. What you are doing is this: you are sowing seeds for your future. You are planting it now. You're building a good physical body so that when that money comes, you're actually able to enjoy, because if you don't have health, there's nothing you can do. Number two is auto insurance. Many people are driving cars with just third-party insurance. Imagine Mr. Lagbaja hitting you in traffic. You now get down, be fighting, be swearing, or even saying that it is fine, it is witches from the village, when you could have just gotten insurance and gotten back into your car and make that claim. So see now, wisdom, even the Bible says wisdom is profitable to direct, right? So there's some things that we can just do properly, that we can avoid certain things. So we're very aggressive on insurance. The third one is life insurance. Now, this is a very tricky place. What I always tell is this: majority of the people that listen to us are young people between the ages of 25 to 35. If you don't have children, I'm not too worried. The people will take care of themselves when people die. But once you have kids, the game changes. So if you have children, it's something for you to consider. So that way, your children are not at the benevolence of people where, if God forbid anything happens. The fourth one, which is actually the most important one, is reputation assets. Nigeria is a low trust environment and people talk, right? So they can say that you are ugly, you are not tall, you don't smile. That's fine. but they should never question the quality of your work. Let people know you for excellence. Let people know that whenever you say you will deliver X, you will actually deliver X. So your reputational asset is very critical. You should be known that we're so good at what we do. So even if you start looking at this, there's something called a top of the mind concept. So for instance, if somebody is asking me about, do you know anybody that speaks about, speaking about women or speaks about ensuring that women progress, I know a company will come to my mind. If people are asking about SMEs, a particular company will come to my mind. They've done that job of ensuring that their reputation is intact and they're at the top of your mind. And we need to be able to do that. Start seeing yourself as a company. Start seeing yourself as a personal brand. So you can be saying, oh, but I don't have a company. I don't need to do that. It's a lie. Start saying it. There's a particular person in the financial industry. One of the asset management companies poached him from another one, and their finances started seeing a significant difference. That person has built such a powerful personal brand that when they moved him from that asset management firm to the other one, he was able to pull that weight. And that is what we need to start doing in our personal capacity. Great. Next one, achieving financial independence is actually very slow because we always hear in the media, oh, Flutterwave did 1 billion, Paystack did 200 million. And I'm not trying to curse anyone. The chance of that happening is actually very slim, right? The truth is, for a majority of the people, they might not see that kind of money. And I do not mean it in a bad way, right? So, but you have to be very deliberate. What do I want for myself? For other people, they might just have to retire with $1 million. For other people, they might retire with maybe $3 million. For other people, they might retire with 50 million naira. But you have to be very deliberate and say to yourself, building wealth is actually very slow, but I have to be deliberate about it. So when I spoke about goals, long-term goals, go and get a pen and paper. What do I want my retirement to look like? Now you're thinking, I'm in my early 30s. It's too early to have this conversation. That's not true. This is the best time to start having that conversation so that all the steps you make now, you are being deliberate towards it. Remember, this is a long-term game. Again, I was having a chat with my friend. We're saying, 5 years from now, oh my gosh, there'll be so much change. You can see we are thinking long-term. We already started planning that, in the next 5 years, all these things that we're seeing as, business itches, we want to grow, we want to go to the next level, we would have crossed it. But if we're not thinking, if we're not planning, if we're not being deliberate, it won't happen. So I want to reassure you that building wealth is actually slow. Some people get it faster, but on the ordinary, it's actually slow. Everybody's talking about Amazon now. Amazon started about 30 years ago. Right? So your company is just 3 years, or you're just really young in the business and you're already stressing yourself. Why are you doing that to yourself? It's a long-term game. Be patient, do all the right things, and allow time to do its work. Now, before we go further, I love to use a scenario and I want us to try it. Come into the comment section. If you were investing 20,000 naira every month and you were getting 10% per annum, over the space of 40 years, how much do you think you would have when you hit retirement? I repeat, 20,000 naira every month, 10% per annum, duration is 45 years. How much would you have by the time you hit retirement? There's a right answer, but I also want to hear from you. Hurry up, guys. I want to hear from you. Hurry up, hurry up. Comment section, guys. So you're investing 20,000 naira every month. You're getting 10% per annum. By the time you hit retirement, how much would you have? After 45 years, hurry up, guys. There's a right answer, but wrong answers are welcome. I want to hear from you. Please indulge me.
Maybe they should put it as a question out there too, so that people
Okay,
can,
cool.
Yeah.
All right, cool. Okay. Okay, Tare Ogu is saying that it's 1 million. Somebody is saying 216. Somebody is saying 32 million. Okay, thank you all so much for indulging me. The right answer is 211 million. 211 million. This just goes to show you the power of compounding. That 20K that you're despising, that you think is little money, 211 million. And this is why we are preaching compounding. So don't despise that 20K that you're saying, it's not big money. Don't despise it. Put it away. Make it invest small by small, small by small, small by small in the long run. Now, if that person had started 10 years after, they would have lost 135 million because they did not start early enough. And that's why we want to grab them young. We want them to start early. Now you are thinking, I'm already in my 30s. Is it too late? No, it's not too late. Look at what's happening. If you double your hustle, you're doing 50K instead of 20K, you catch up with the person that started in their 20s. Now imagine you're doing 100K, boom. If we were still at 380 naira to the dollar, that would have been what? That would have been $1 million. So are you seeing how it works? So compounding is an interesting thing. It gives you, it energizes you, it motivates you, lets you know that this is a long-term game. Now, with all the worry in Nigeria about the currency risk, the naira is depreciating. Imagine you are turning this thing to dollars after every three years. You then be seeing the growth in dollar, right? So please, 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 let us invest in the long run. Let's have a long-term mindset and let us build wealth in the long run. I think I'll end my session here because a lot of the other things Mr. Bisi has already touched on it. Thank you so much for having me. I'm very excited to be here. Thank you.
Thank you, Tosin. We really learned a whole lot from you. And to our participants, I'm sure that two major things that Mr. Oni and Tosin actually laid emphasis on was mindset. And then read. You have to keep reading to know more about investment so you don't end up losing your money. And she also mentioned think long term. And then building wealth takes, she said it's slow. Just like Mr. Oni said, it requires patience. Investment requires patience. Building wealth requires patience. You should look out for the get rich quick scheme, else you might just lose all your money. And then she said it's never too late to start. Whether you're in your 30s, your 40s, your 50s, in as much as you've not gotten those millions, you're an emerging millionaire and it's not too late to start. Thank you very much, Tosin. It was nice having you on the session today. Okay, I have a question here, but I'll be directing this question to Mr. Oni. One of our participants asked, said, can you advise us on the various buckets and associated ROI in FundQuest?
Okay, I will get the head of that business to speak to that. The head of the treasury business in FundQuest, I guess is there. So let him just speak directly to. But the products that are there, maybe that will guide a little bit. Just a minute. Let's see whether I can share this again for you to see. So Michael can as well just give that directive and then just a minute. Well, again, to the person that asked the question, speaking directly to this, investment, return on investment is not static. By the time you are making this call, for instance, whatever we say here, this is a public conversation, whatever we say concerning any of these, if the market has moved significantly, because we are now, the interest rate in the economy is trending upwards. So what we'll be telling you today, for instance, we definitely, but we can give you a guide on some of them. Like I spoke to Platinum Investment Note. Platinum Investment Note is on minimum of 100 million and above to manage your investment. For retail, so those retail ones, we have a target, TIP. The type of rate you get here is single digit. For Platinum is double digit. Instant value notes, the same thing. Fixed investment note, it depends on tenure. You know, because when you are building or you are purchasing a product, the tenure, there are so many other things that comes into be the volume, what you are investing, then the tenure, then before we can make you a quote. But like Quest Vault, for instance, is money you don't want to touch. You just want to get it locked in there. Maybe like Tosin said, you want to put your 20,000 in there every month and you want it locked. And you can also, depending on the tenure, she advised that after 2 or 3 years, you move it to dollars so you can see the progression. Even in dollar terms, you can still have single-digit interest rate. So you are not losing money. The fact that you've changed it to dollar, you're still making dollar income from that. Then secure investment plan gives you opportunity to lock in an investment, but a sizable one this time for over a period of, say, 6 months. And with that, it's a double-digit type of return that's possible. But what I can say concerning that return is it depends on which of these products and what volume you are starting with and the tenor you are considering. I don't know whether I attempt to answer that question.
Thank you, Mr. Oni. I'm sure the participants must have gotten answers to his or our question. Thank you, sir. Tosin, there's a question here for you. and it goes thus. An investment with astronomically high returns, does it automatically translate to Ponzi scheme?
Okay, thank you so much for asking that question, Hawao. So now the thing is this, right? People always think that when something is astronomically high, does it always? The truth is there's a very high chance that it could be, but there are some times that it's also not. You could have really just been a good market. So for instance, I have an acquaintance that bought an art, right? She bought an art piece for about 2 million naira. Coincidentally, that same art person, the artist, started having shows in New York. She did not know it was even going to happen. The art piece that she bought for 2 million all of a sudden got valued at $100,000 because there was a change in the valuation of the artist. It was not planned. Another example would be cryptocurrency, right? There are some coins that, not meme coins, I'm talking about real coins that have real business potential and things like that. Some of them could deliver like 200% return in a month, which ordinarily sounds like a Ponzi kind of return, right? And it's not a Ponzi. Now, the criteria is here. If anybody is promising you a very high risk, or let's even say a risk-free rate plus, let's say 4%, and it's guaranteed, we have a problem. A high return is not guaranteed. There are many things that could work in your favor or that might not work that would let it be a high return. But if they're saying get 30% every month, we are talking Ponzi, because you cannot guarantee a high return, because a lot of things will work that will determine if that market will go up or not. Look at the stock market. When COVID happened, the stock market suffered a loss for about 4 months or even 5 months before, towards the end of the year, the market started bouncing back. Can anybody guarantee it? You can't guarantee it. So my biggest problem is when people say get 30%.
Wow. I think Tosin is experiencing some network glitches in our end. While she sorts that, Mr. Oni, could you please take this question? Someone asked, crypto compared to stock, which is preferred?
It depends on you. It depends. When you say preferred now, what are you using as a matrix, as a measuring matrix? Is it income? Is it tenure? Is it understanding? Is it access to cash? Is it liquidity? Is it risk? What are you? It depends. But again, like Tosin said, let me write from where she stopped, talking about crypto. To the extent that quite a number of people are struggling with being painstaking in understanding, in reading where they're putting their money, then they will continue to lose their money. Learn a little. You don't need to be a Bitcoin analyst before you understand what cryptocurrency is. You don't need to be able to dimension a white paper before you could get someone to educate you. There are some brilliant Nigerians that understand that space. So depending on your investment horizon, the risk you are willing to take, your return expectation, if it's return, definitely it's going to be in the crypto space. But if it is, you want something that you can literally, you are there, you don't understand, you are this type of people that said, well, this thing can disappear. Internet can just disappear, then crypto will just disappear. Then go and stay with your equity that you think cannot disappear. We've seen companies die, just go out, go bust on Nigerian Stock Exchange. We've seen prices of shares crash from 74 to their current, maybe single digit, less than 10 naira currently. That has happened, and not as a result of bonuses or something. It's just more of management. And we've seen some other very beautiful companies on Nigerian Stock Exchange. They've done exceptionally well. Year in, year out, they have guaranteed income, so to say, because you know that their dividend yield will always be around 10%. So if you have a dividend yield of 10% over and above the capital gain that is possible on any security, I think cumulatively you are better off. But if you can't hold the gyrations, the dynamics, the movement in prices of cryptocurrency, if you don't have that stability, don't venture in. You're going to develop high blood pressure very quickly. Okay.
All right, sir. Just another one before you go, Mr. Oni. What investment opportunity would you recommend in the commodity market space in Nigeria?
The commodity market space in Nigeria, interestingly, is still at a very crude level. I think if the person asking the question is talking about what currently happens in Chicago Board of Trade, that exchange where crude oil, where metals, where all those assets are traded. But here, what you see, especially at the Abuja Commodity Exchange, is more of still traditional exchanges of those products. But if you are trading anything, it's more of seasonal because we are still talking more about the primary agriculture here. So we're talking about commodity. There is a season for cashew nut, there is sesame in Nigeria. There are quite a number that I see. I mean, because we fund some of those projects when we see people, cashew nut especially, people go there and it has a season. So if you can dimension your market, you know you have an off-taker, we'll be happy to talk to you. And then if you, we can look at the terms and then advise you accordingly. But we always look for, we always prefer those clients that already have an off-taker. Or unless you want to bring it to Lagos, by the time it gets to Lagos, then whether the quality is good or not, you get paid. We want to see all that. Then we can advise.
All right, Mr. Oni, thank you so much. It's been an insightful one. I guess Tosin is back now. Tosin, are you in?
Yes, ma'am, I'm here. I'm right here.
Welcome back. Sorry about the network glitch.
No, it's fine.
All right, I have just one last question for you, Tosin, and it states, what are the best USD options that are low risk, seeing that there is inflation and devaluation?
Good question. So, I mean, you're talking about low risk. Under the low risk segment, we have dollar denominated funds, or we have euro bonds. Euro bonds in most cases has a high entry point, right? So lots of asset management companies, just like FundQuest as well, they usually have a situation whereas they have a dollar denominated fund that they can get from other micro investors that can put together and be able to enter into that space. So under low risk, that really is your option. If you're talking about medium risk, medium risk would be things like global shares, high risk would be things like cryptocurrency, amongst others. But for low risk, dollar denominated fund or euro bonds will fall under that criteria.
All right, thank you, Tosi. Please, I apologize to every question that has not been taken. Please be informed that we will duly answer them via your emails. Thank you, Tosi. So right now we'll be taking our chief host, Mr. Abiodun Akinjayeju.
Thanks, Hawa. And let me also say thank you to one of them in-house, the other one, our guest lecturer. I want to thank them very heartily. I think I need to show my face at this point in time so that at least everybody can see that it's not a spirit that is talking. I want to thank the two speakers for the insightful papers they presented at this webinar. I'm glad that we are catching them young. We are talking to the young emerging millionaires, and it is also necessary for me at this point in time to chip in one or two words about the youngsters. First is the fact that they can be adventurous because they are still young. Every mistake made can still be corrected, which is what the advantage they have gotten. So they need to be adventurous in their investment horizon and in their investment activities. But in being adventurous, they also have to imbibe the advice that we're taught in business school: diversification of investments. You need to be highly diversified. Don't put all your egg in one basket. It is key that, that point also have to be made to the young investors. But more importantly, my candid advice to the young investors is that they need to watch their consumption pattern. You must, if you want to make it in life, stop being a compulsive buyer, particularly in consumption. Some of us learn it a bit late when we're growing up. Everything at that point in time is to be consuming whatever we earn. the Yorubas will say, I mean, when you pay sorry for non-Yorubas about this webinar. That is the early money that the youngster made, they used to buy a akara beans cake. It's just consumption. But when you imbibe the act of investing early in life, it pays. I will give an example of myself. When I started my youth corps in non-merchant bank way back in 1988, I served in 88, 89 in non-merchant bank Marina. By that time, our NYC payment was 150 naira. And the non-merchant bank that I was serving would also give us additional 100 naira. So at that point in time, it was good money. That 150 naira, you can feed all through the month and you still have about 100 naira left in your hand. By the time I saved for the first 9 months, what did I do? I went to go and buy a television and a video recorder. You get my point? That was the two of them at that point in time was about 1,500 naira. Meanwhile, at that point in time, and I happened to be serving in Nigerian Stockbrokers Limited, I was selling shares. So rather than using that money to buy UAC shares, Nigerian Breweries shares, the Nigerian Breweries shares was one of the highest at that point in time, 60 kobo. UAC was 51 kobo, 52 kobo at that point in time. So at some point, my perspective changed. So when I became a full staff after my youth corps, I was entitled to a loan. The first loan I got was 1,500 naira that I used to buy UAC shares, Nigerian Breweries shares, and Nestle. 4 years down the line or 5 years down the line, when I went to marry, it was the same shares that I actually sold to fund my marriage expenses without borrowing a couple from anybody. That is a lesson. So that's why I said, please, the youngsters should stop being a compulsive buyer. And it's unfortunate that at this point in time, there's so many things right in your face that can actually make you to go into that trajectory. iPhone 13, iPhone 14, Samsung 23s, this one, that, this Bluetooth, this, Bluetooth, that. Those gadgets are money-gulping devices. And most of them, you don't even use 60% of those things inside those devices. And those are the things that they need to watch out for. I'm always appalled when I see a student holding an iPhone 12 worth 720,000 naira. That's the value of a land in Mowe, for God's sake. So some of these things, the young millionaires have to learn this act of not being a compulsive buyer, but to save and save and save. And these things, in about 10 years' time, you will see the benefit of those savings and investment. So it is important that we advise our young millionaires and emerging ones who want to be adventurous, to diversify their investment activities, and to watch their consumption pattern. Don't eat with two hands. On that note, I want to once again thank our paper presenters. It's been a wonderful session we have with them. And for the organizers, I say well done. Please keep it up. Thank you.
Thank you, sir. Thank you, Mr. Akinjaiju. And to our participants, I mentioned earlier that at FundQuest, we understand the significance of education before investment decisions. And you would agree that this webinar has actually done justice, even more to that. And like our chief host, Botres, said, stop being a compulsive buyer. Stop being a compulsive buyer, especially on consumables. Invest. It is important because when you're investing, you are thinking long term, and it's not just going to help you at the moment, but even for future responsibilities. You can fall back on your investment at any point in time. On this note, I say thank you very much for being a part of this conversation. We look forward to having you more on other webinars we'll be organizing. And also note that FundQuest Financial Services Limited has various products tailored to meet your various financial needs. And on this note, I say thank you once again, and do have a wonderful weekend. Thank you.
Tosin, thank you so very much. We appreciate your time, and we're going to have a conversation, like I said earlier. Thank you so very much. Thank you, Awa.
Thank you.
Tosin,
thank you very much.
So we need to take this offline and have that conversation.
Fantastic.
Yeah? Okay.
Thank you, sir. Thank you,
okay.
FundQuest.
Have a nice day. Great.
You too, sir.
Bye. Cheers. Bye.